What if I told you the biggest threat to your retirement isn't the stock market, isn't inflation, and isn't medical costs? It's a tax you never stop paying. Property taxes don't care if you're retired. They don't care if your income drops in half. They don't even care if you live to 105. As long as you own a home, the bill keeps coming every single year. The average senior pays thousands annually, and unlike income taxes, there is no finish line. That's why so many retirees are being quietly forced out of the homes they spent their entire lives paying for. But here's what almost nobody is talking about. Between 2023 and 2025, 5 U.S. states quietly rewrote the rules. Not small deductions, not temporary relief. I'm talking about pathways to zero. In some states, seniors are getting their property taxes refunded in cash. In others, taxes are frozen for life. And in one case, property taxes are being eliminated automatically, forever. Most people who qualify have no idea these programs exist, and missing one deadline can cost you tens of thousands of dollars over retirement. So if you're a homeowner planning retirement or helping your parents prepare, you need to see this. Stay with me. Let's start the countdown. Let's start the countdown with a state most people completely overlook. Nebraska. Flat land, big skies, quiet towns, and until recently, a serious problem. Property taxes were pushing seniors off land they'd owned for decades. Fixed incomes couldn't keep up. Taxes kept rising, and retirees started leaving. So in 2024, Nebraska did something no other state has done this way. They didn't just lower property taxes. They didn't just cap them. They created a refund system that can wipe them out entirely. Here's how it works. If you're 65 or older, live in Nebraska, and your household income is under $100,000, you may qualify for the Nebraska Property Tax Credit Program. And the key word here is refund. You pay your property taxes like normal. You feel the full bill. Then, after you file, the state sends you a check. For lower income seniors, roughly under $45,000 single or $52,000 married, that refund can be up to 100% of what you pay. That means your effective property tax bill can be zero. Not reduced on paper, not hidden in an assessment. Actual cash back in your hands. Why does this matter? Because most tax relief feels invisible. You never really notice it. Nebraska makes sure you do. You pay the bill, then the relief shows up in the mail. But there's a catch, and it's a big one. Nothing is automatic. You must apply every single year. You must include all income sources, Social Security, pensions, investments, and you must hit the deadline, typically June 30th. Miss it by one day, and the refund is gone. Here's a real example. A retired couple, both 68. Combined income, $48,000. Property tax bill, $3,200. Under Nebraska's sliding scale, they get about 85% refunded, over $2,700 back. The real cost to own the home that year? Less than $500. And Nebraska isn't stopping there. The state is actively pushing a constitutional amendment to eliminate school property taxes, which make up the majority of most bills. That's the future. But the refund program? It's available right now. And if you qualify and haven't filed, you may be leaving thousands of dollars on the table every single year. Next on the countdown, a state that doesn't refund your taxes. It freezes them for life. If Nebraska sends you a check, Georgia does something even more powerful. It locks time. In 2024, Georgia voters approved a statewide constitutional change that quietly transformed retirement planning, especially for homeowners. Here's the headline. If you are 62 or older, Georgia now freezes your home's assessed value for life, not in one county, not as a pilot program, statewide, permanent, constitutional. That means whatever your home was worth when the freeze kicks in, that's the number your property taxes are based on forever. Your home could double in value. Your neighborhood could explode in price. Inflation could rage for decades. Your assessment doesn't move. But that's only the first layer. In most Georgia counties, school taxes make up 60 to 70% of the entire property tax bill. And Georgia has been exempting seniors from school taxes for years. What changed in 2024 is who qualifies. Income limits were expanded dramatically, and in some counties, eliminated entirely. In parts of Metro Atlanta, seniors with incomes near $100,000 qualify for school tax exemptions. In other counties, simply turning 62 is enough. That combination is devastatingly effective. Assessment frozen. School taxes gone. For many retirees, what's left is a bill so small it barely registers. And Georgia didn't stop with property taxes. The state also exempts 100% of Social Security income, pensions, up to $65,000 per person in other retirement income, and even more after age 65. Stack it all together, and Georgia becomes one of the most tax-efficient retirement states in America. But here's the trap. None of this is automatic. You must file a homestead exemption. You must check the senior exemption boxes, and you must do it by April 1st. Miss that date, and you wait an entire year, even if you already qualify. Georgia will happily take your full tax payment if you don't apply. So if Nebraska rewards awareness with a refund, Georgia rewards timing with permanence. Once you're in, you're locked in. Next on the countdown, we go west, to a state that turned property taxes into a financial strategy, not a bill. Colorado didn't eliminate property taxes for seniors. They did something smarter. They built a system that lets you engineer your way to zero. And it starts with a problem every retiree in Colorado understands. Home prices exploded. In the last few years, values across the state surged. Denver, Boulder, mountain towns, ski resorts. A house bought for $300,000, suddenly worth $600,000, looks great on paper, until the property tax bill shows up. For seniors on fixed incomes, it was unsustainable. So in 2024, Colorado redesigned senior property tax relief into a 3-layer system. Layer 1 is the senior property tax exemption. If you're 65 or older, or a surviving spouse 58 or older, and you've lived in Colorado for at least 10 consecutive years, the state removes 50% of the first $200,000 of your home's value from taxation. That's up to $100,000 erased from your tax base. Depending on where you live, that alone can save hundreds to over $1,000 per year. But Colorado didn't stop there. Layer 2 is where things get interesting. The senior property tax deferral. After the exemption, whatever tax bill remains can be deferred indefinitely at just 1% simple interest. Not compounded, not 6%, not 8%. 1%. That means you can legally pay $0 out of pocket for property taxes while you live in the home. The taxes become a lien, settled only when you sell or pass away. For many retirees, the math flips completely. Your home keeps appreciating. Your taxes stay unpaid, cheaply. That's not a burden, that's leverage. And then there's layer 3. The property tax, rent, and heat credit, Colorado's circuit breaker. If you're a lower income senior, the state can actually send you money back, even after the exemption. In some cases, seniors don't just avoid property taxes, they end up net positive. Colorado created a system that works for modest homes and million-dollar mountain properties alike. Exemption to reduce, deferral to eliminate payments, credits to reverse the flow. Next on the countdown, we leave complexity behind and head to a state where the rule is brutally simple. If you qualify, your property taxes are gone. If Colorado was elegant but complex, South Dakota went in the opposite direction. They asked a simple question. What if qualifying seniors just didn't pay property taxes at all? And in 2024, they made that real. Here's the rule. No layers, no strategy, no math gymnastics. If you're 65 or older and your household income is under $32,000 single or $40,000 married, your property taxes are eliminated, not reduced, not deferred, not refunded. Eliminated. Zero. And this matters more in South Dakota than almost anywhere else because the state has no income tax. None. Never has. That means a $40,000 income in South Dakota goes much further than it does in high-tax states. You keep what you earn. But here's the detail that most people miss, and it changes everything. South Dakota does not count all income the same way. Only 50% of Social Security income counts toward the limit. Let that sink in. A couple receiving $36,000 in Social Security and $15,000 from a pension has real income of $51,000. But for qualification purposes, only about $33,000 counts. They qualify for zero property taxes, despite living on over $50,000 a year. That design quietly pulls thousands of middle-income retirees into full elimination territory. And if your income is too high for complete elimination, South Dakota still has a safety net, a permanent property tax freeze. If you're 65 or older and your income is under higher thresholds, roughly $47,000 single or $58,000 married, your property taxes freeze at today's level for life, not just the home value, the actual tax amount. Your neighbor's bills go up with inflation. Yours doesn't. Over a 20-year retirement, that freeze alone can save tens of thousands of dollars. But there's one thing you must do. You have to apply. And the deadline is April 1st, not April 15th. Miss it, and you wait a full year. South Dakota's message is blunt and unmistakable. If your income is modest, You don't pay income tax. You don't pay property tax. And the state leaves you alone. Next on the countdown, a state doing something no one else has ever attempted. Using oil wealth to erase property taxes automatically, forever. North Dakota isn't reducing property taxes for seniors. They're trying to replace them completely. And they're doing it with something no other state has at this scale, an oil-funded investment machine. Here's the backstory. For years, North Dakota collected massive revenues from oil and gas production. Instead of spending it all, the state saved it. They built what's called the Legacy Fund, now worth over $11 billion. That money isn't sitting idle. It's invested. And every budget cycle, it generates hundreds of millions of dollars in returns. In 2025, state leaders asked a radical question. What if those investment earnings paid property taxes for seniors instead of taxpayers? That idea became law. Here's how it works right now. If you're 65 or older, North Dakota doubled its senior property tax credit from $500 to $1,000. On top of that, every homeowner receives $550 in Legacy Fund property tax relief. Combined, that's $1,550 per year for senior homeowners. For many seniors in North Dakota, that already covers most or all of their property tax bill. But this is where North Dakota becomes different from every other state on this list. The relief is designed to grow automatically. As the Legacy Fund grows, as oil revenue continues, as investment returns compound, the property tax relief increases. State projections show senior relief exceeding $2,000 per year within a few years, enough to fully eliminate property taxes for the average senior homeowner. No income limits, no annual application, no political guesswork, and eventually, no property taxes. This isn't a temporary program. It's not a tax break that expires. It's a self-sustaining system where asset returns replace taxes. And here's why it passed when other attempts failed. Voters previously rejected property tax elimination because it had no funding source. It was a wish. This time, the funding already exists. The money is already there. The returns are already real. All seniors have to do is file a one-time homestead credit application to get into the system. After that, the relief flows automatically and grows over time. North Dakota isn't promising lower taxes. They're building a future where seniors simply don't have them. And when you zoom out, these 5 states aren't offering loopholes. They're redrawing the retirement map. Let's bring it all together. 5 states, 5 very different approaches. One clear direction. Property taxes, long considered unavoidable in retirement, are no longer a fixed rule. They're becoming a design choice, shaped by policy, demographics, and economics. Nebraska refunds your taxes in cash. Georgia freezes your tax base for life. Colorado turns taxes into a strategy. South Dakota deletes them outright for modest income seniors. And North Dakota is building a machine designed to erase them automatically. Forever. These are not loopholes. These are not temporary gimmicks. Most of these laws passed in 2024 and 2025. And many retirees have no idea they exist. And that's the real risk. Not paying too much tax, but not knowing you don't have to. So here's the question I want to leave you with. If you're planning to spend 20 or 30 years in retirement, why would you ignore the single largest fixed expense tied to where you live? Another question. Which of these states surprised you the most? Was it the refund check, the lifetime freeze, or the oil fund paying taxes for seniors? Drop a comment below. I read them all. Now, a quick but important note. This video is education, not personal tax advice. Rules vary by county, income, and filing status, and deadlines matter. Always verify details before making decisions. But awareness is step 1. If you're a homeowner approaching retirement or helping parents plan theirs, this information can change real lives. If you want more breakdowns like this, real policy shifts, real numbers, and the financial moves that actually matter, hit subscribe. We don't chase headlines here. We track structural change. See you in the next video.